Peace and love, good people. Peace and love. So let's get right back into the chart code. So this is a very popular pattern that I need you to recognize any and every time you see it. All right, the bullish flag. All right, so a bullish flag is considered a bullish signal, indicating that the current uptrend may continue. All right, a bullish flag follows a steep or nearly vertical rise in price and consists of two parallel trend lines that form a rectangular flag shape, as you can see in the diagram below. The flag can be horizontal, as though the wind is blowing it. Interesting. Although it often has a slight downtrend. All right, so keep that in mind. Don't think that if you want the flag to go up, it needs to be trending up. No, it's kind of a slight downtrend and then a pop out of the end of the flag. All right, the vertical uptrend that precedes a flag may occur because of buyers' reactions to a favorable company earning announcement or a new product launch. All right, so the reasons why you see that spike in buyers. All right, the sharp price increase is sometimes referred to as the flagpole or the mast. The rectangular flag shape is the product of what technical analysts refer to as consolidation. Consolidation occurs when the price seems to bounce between an upper and lower price limit. This might occur, for example, in the days following a positive product announcement, when the excitement is starting to subside and fewer buyers are willing to pay the high price that was commanded just a few days before. But at the same time, sellers are unwilling to sell below a lower support limit. A bullish signal occurs when the price rebounds beyond the upper trend line of the flag formation and continues the original upward price movement. This is considered a pattern confirmation. All right, we always love confirmation, although anticipation can save you money if you're wrong. When speaking about flags, technical analysts may use jargon and refer to the flag as flying at half mast. Visually, this reference is nothing like a flag at half mast, such as on a day of a national mourning. Instead, this term refers to the location of the flag at the midpoint of what would otherwise be a continuous uptrend. All right, so hold on. Let's make sure we can digest that. When speaking about flags, technical analysts may use jargon and refer to the flag as flying at half mast. Visually, flying at half mast refers to the location of the flag, which is at the midpoint of what would otherwise be a continuous uptrend. Okay, got you. So, if you notice in this diagram, the consolidation piece or the flag piece is halfway between where this pattern starts and where it ultimately ends. All right, so flying at half mast, you're looking for the continuation to be about the same length as the flagpole. Important characteristics. Following are important characteristics for this pattern. Trend lines. Flags are very similar to pennants. However, with a flag, the price trend lines tend to run parallel, whereas with a pennant, the price trend lines tend to converge. Remember, con with, verge, merge, to merge with. So the trend lines are coming toward each other on a pennant, whereas with the flag, they're running side by side and look like they could go on forever without crashing. Volume. As the flag develops, the volume tends to decrease. Following a positive product announcement, the price may have reached an unexpected high and fewer buyers will be willing to buy. Interest in the stock may resume, however, as price drops and sellers begin to lower their price. The increased activity explains why you will often notice a sharp spike in volume at the end of a flag. The Duration of the pattern. Martin Pring notes in his book Technical Analysis Martin Pring Notes in his book Technical Analysis explained that flags can form in a period as short as 5 days or as long as 3 to 5 weeks. So we're talking about the daily and the weekly time frame. John J. Murphy identifies that flags often last no longer than 1 or 2 weeks. Trading considerations. Possibility of price reversal. In some rare cases, the price will break against the original price movement and create a reversal trend. All right, so nothing is guaranteed till it happens in the market. So keep that in mind. None of these are the holy grail signals or indicators. The pattern reversal may be signaled during the flag formation by a sharp increase in volume as opposed to the more typical decrease. Duration of the pattern. The duration of the pattern depends on the extent of the price fluctuations or consolidation. The greater the fluctuations, the longer a pattern will take to develop. So the longer that the pattern is in consolidation or the stock is bouncing between two prices, the longer it will take to break out. Target price. It is commonly held that the length of the flagpole indicates the potential price increase. When the flag completes, the price typically jumps to replicate the height of the original flagpole while continuing in the direction of the inbound trend. I just said that. Criteria that support. Value. Volume should diminish noticeably as the pattern forms. A strong volume spike on the day of the pattern confirmation is a strong indicator in support of the potential for this pattern. The volume spike should be significantly above the average of the volume for the duration of the pattern. In addition, the volume over the course of the pattern should be declining on average. All right, so volume. Whether we're playing the price action, the charts, any indicators, typically we're all looking at the volume and the average price. All right, don't let that go over your head. Criteria that refute. So what makes the flag invalid? According to Martin Pring, we got to check out Martin Pring and look up who he is because they keep talking about him. All right, so according to Martin Pring, a pattern that exceeds 4 weeks to develop should be treated with caution. After 4 weeks, interest in the stock is likely to decrease to a point that it is unlikely to continue in a strong uptrend. No volume spike on a breakout. The lack of a volume spike on the day of the pattern confirmation is an indication that this pattern may not be reliable. In addition, if the volume has remained constant or was increasing over the duration of the pattern, then this pattern should be considered less reliable and may actually reverse. The long inbound trend. Shabacker writes that Shabacker is wild. Shabacker writes that when a mast is long and its flag relatively small, we should naturally expect the movement to be pretty well exhausted when its indicated objective is reached. He suggests that when you observe this formation, he's talking about a little flagpole and a big long flag, and a price continuation occurs, it is best to use the flagpole as a yardstick to indicate the level at which to take profits, step aside, and watch for further charts development. Okay, so listen, bars, okay? When that flag forms and we're watching and waiting as the trend lines continue to smooth down to an angle downward and then pop when we get that first Maribozu candle / elephant candle that comes out of that flag pattern, we should anticipate that it's only going to be as long or as the price movement is only going to be as large as the flagpole. So if the flagpole was a 50-cent move, or if the flagpole represents a $2 move, once we pop out of that flag pattern, do not expect a $5 or $10 move. Your best bet, even if it goes $5 to $10, is set your price target for that same $2 distance that the flagpole represents. All right, that's the safe target price. All right. Underlying behavior. So what does the flagpole ultimately represent? I feel like this writer has told us 3 times what the flagpole represents, but just to drive it home, he's gonna say this. This pattern is effectively a pause in an uptrend. The price has gotten ahead of itself with a steep rise. Therefore, market activity takes a break before continuing the uptrend. This pause is reflected in the decreasing trading volume. Similarly, a spike in value marks the resumption of the uptrend. The bullish flag. Peace and love, good people. I hope this was helpful. I hope you get rich. Stay tuned for more stocks to watch, more of the chart code, more money in minutes, and more of Stock Market Daddy. All right, peace and love, and I'll catch you in the next video. Please subscribe to the channel, like this video, and share it if you will. Take care.